Now, Ajay, hi, afternoon. Good to have you on the show. Does it seem like all that pain from September to October is now behind us? Can we confidently say that?
Yeah, so I think hi, good afternoon, and thanks for having me on the show. So I think in the medium term, at least it looks like because after a fairly long time, we have had a correction which is more earnings downgrade led, and we have seen almost at an aggregate level, I would say around 10% downgrade, and to that extent, we have seen closer to similar correction in the markets. But I think considering what we are going through right now as well, consumption was anyways lagging, and now the government capex is also on a decline. So I think we need to stay really agile in terms of how the earnings shape up from here on, because I think going forward the expectations which are built into the market are still of around 14-15% growth. So in case if we see further downgrade, then maybe we can see one leg down more going forward. But I think till the time further clarity emerges, I think we'll be in a range anywhere between 23,000 to 25,000 in that 10% kind of a range.
Uh, Ajay, the problem for the market was rich valuations and growth. Have both those problems got addressed? Because valuations are just about okay, and growth is genuinely slowing down.
Yeah, so Nikun, the point is that still there is a hope that from this year, say 5-6% growth, we'll move back to 14-15% growth next year, and therefore I think the valuations are still, I would say, a little bit on the higher side, because if you look at the Nifty aggregate EPS number, that has been moved forward by 1 year. So what we were expecting earlier to happen in FY25 is now actually getting translated into FY26. And therefore, if you look at those numbers based on 1200 rupees EPS, we are still trading at around 20 times. So I would say you are right that growth has come off, but I think the valuation premium is still there. That is mainly because of a hope that earnings will recover.
So let's look at some spots where there is a bit of a shakeout, and the number one space where shakeout has happened is PSUs. From PSU banks to railways to defense, just about everything and anything in PSU has seen a deep correction of 15 to 30%. Now everyone told us that the leadership of a bull market never changes. So if PSUs are the real leader of this bull market, is it time to buy those leadership stocks again?
So Nikul, again over there, if you see for last 3 years or so, the key driving force was the government capex, which led to a significant, I would say, stimulus to the overall economy. And as we all know that in the first half, because of either heavy monsoon or the election period, the government capex is almost on a decline year on year. So therefore, that is getting reflected in most of the PSU sectors. Now my sense is that we will stick to those budgeted numbers, and therefore 11 trillion rupees which the government has allocated towards capital expenditure, if that gets met in the second half, then I think we can again see some sort of pickup in overall ordering and execution from the PSU companies, and therefore you can again see some sort of leg up. But as I said that there is a lot of uncertainty right now in terms of how the government is looking of in terms of spending money, and that is the key, I would say, the driving force. And along with that, if you look at how RBI is also going to act, because from a lot of companies that we talk to, it seems that there is a serious shortage of liquidity at the ground level. So my sense is that we already had cuts from Fed, two of them. Now we need to see some sort of action from RBI. So a mix of both RBI as well as government action will it actually give some respite to the markets and especially the PSU sectors.
Ajay, can't get your eyes off HDFC Bank, can you? I mean, the market cap has now reached those, high and mighties of Reliance and TCS as well. And I was just looking at the 6-month performance. It's only ICICI Bank and HDFC Bank which have actually managed to perform well. I'm seeing an Axis Bank which is actually down 5% in the last 6 months, the stock performance that is, and SBI also down about roughly 6% or so. Where is it that you're finding comfort within the banking space right now to put fresh money to work?
Oh, I think so. Overall, banking space is looking, I would say, reasonably attractive because when you if you look at last 2 years, banking has been an underperformer because you are getting growth in many other sectors. Now, relative to all other sectors, banking is still stable, and most importantly, the valuations are below mean, and therefore you are seeing some sort of interest in HDFC Bank or SBI, because I think that eventually when growth starts to collapse, people would look for safety, and the safe net is available at reasonable valuation, and therefore you are seeing some sort of outperformance over there. So I think the overall banking space, private as well as public, is looking interesting even from here on.
Right. Okay, Ajay, great to have you on the show. Thanks for taking the time out and speaking with us today.
Thanks a lot.
Okay, that's